Good morning, welcome to the channel. In this video we're gonna review everything that concerns about the pre-market analysis that I do every day, so I can have a broader understanding of what is happening in the markets, right? So with that, let's jump right into and I'd like to start with economic news release. Let's jump right into this, right? And today is a very busy day. We had a continued jobless claim. Um, we had PCE prices came as expected. First GDP revision, quarter over quarter, the estimations were um, here it says 0.8, but I think I was expecting 0 - 0.5. Regardless, the revision did not change much. Well, it was minus 0.9, now it's minus 0.6, but still negative number, right? And on top of that, we do have the GDP price index, 9%, meaning that the prices are boosting the GDP numbers too. So the jobless claim within the expectations, 10,000 um, job support. Now the PCE prices came um, at 7.1, so we don't have a really high impact then. Then we have the Jackson Hole Symposium. It's a conference the central bankers and other bankers do every year. I think it's here in the US. And then we do have some bonds auctions later in the day. But the busy part was at 8:30 as usual. So we don't have any like um, high impactful news reports coming out during the trading session. And the Jackson Hole, obviously, the Jackson Hole is a conference going to be the entire day, right? So with that, let's jump right into the charts. I do like to start always with the US dollar. The US dollar as a world reserve currency is the main driver for markets here in the US and on worldwide. So I want to see when the dollar is moving, because when it's in the move, it's usually a lot of volatility involved. In the way I like to use the dollar is most of the time is opposite correlated to at least stock market, right? So every time the dollar goes up, stocks tend, but not always, tend to go down. And the theory behind that and the logic is that obviously when the dollar is getting stronger, the value of things tend to go low, right? With the strong currency, is not the same at the level of value, and that's what it means, right? So stronger dollar, things are gonna go down in price because the currency is stronger. It's just a matter of logic. No, it's not. And look, not all the time is 100% correlated, and sometimes you see dollar going up and stocks going up. That happens, but the higher probability scenario is that when the dollar goes up, stocks go down, right? So we had a run down since yesterday in the morning, right? Up to like 3 when London opened today in the morning. We had German GDP here at 2, and then we held this nice area of demand created in August 19th. And we're going back up. I think the dollar has a free pathway up to this level. So If the dollar goes up and stocks have not collapsed, meaning have not going down at this level, I do expect the dollar to probably base a little bit and then it could turn around, or the other likely scenario is to base a little bit and then keep going up, right? So those are the two likely scenarios for me today in the dollar. Now, if the dollar comes here and I see the dollar starting to break down, I would expect the market to bounce back up. And we're gonna go and we're gonna we're going to pay attention to this because later in this video we're gonna check on the futures market and we'll see the bullish scenario for the at least the NQ, that is the one that I trade. Okay. Okay, I do like to check on the yen as well, although the yen is, and this is an index of the yen, is very wacky, is very hard to read, but this is an index that I created here in TradingView. It's a collection of few of the yen pairs, but we'll see how the yen is very sideways, at least here. Let's go to the daily, and I do have this bullish pattern here, the break of this pivot and then the retest. Right now we're here, we've been here for 2 weeks already, or 3 weeks almost, 2 weeks I would say. And then I do expect the yen, now the yen is in a long-term downtrend. Is this gonna hold? I was saying previously in another live that I needed the yen to break here and then retest, right? But that didn't happen. This supply held, and now we have here. Now, what happened with the yen? The yen is another it's not a strong currency, but it's a safe haven. It's a currency that is used as a safe haven. So as the dollar, but the dollar is the main one, right? The dollar is a world reserve currency, but the yen, sometimes the investor runs into the yen when sentiment is too bearish, right? So I like to use the yen, the dollar, and the bonds, U.S. government bonds. Why? Because those three are the main safe havens by definition. All right, so dollar yen, the yield, the U.S. government yield. This is the 10-year yield. This is a wider traded bond in the world. This is the most traded bond. So I do have a very sideways day today, even though it's in a sort of a supply here. Also, I do like to see this to hold and then be sideways here for a couple of probably 1 week or two, and then break up or break down. Now, what happens? The market does not like high rates, and there is one thing called zero risk rate, and this is the zero risk rate. And when this happens, or these runs happen, market have to price all the assets, right? Because this is a risk-free asset. If you buy a stock, stock have some risk, right? Compared to a government bond, which is quote unquote, it has risk, but there's no risk on default here on the US because they pay in dollars, they print dollars, so they're not gonna default. We could have a lot of devaluation of the currency, inflation and so on, but they will pay you, right, one way or another. So this is a main driver too that I check, is neutral today. So neutral, neutral, neutral. I would expect a neutral market for now, right? Another market that I like to check, another asset that I like to check is the VIX. The VIX is it broke the trend line temporarily, was holding here. Now we're down, we're back to this point, right? I would expect the VIX to come down from here, so that's my higher probability scenario. But if we have a breakdown on the market, now the VIX is gonna shut up. I don't like to lean on the VIX for my trading because this is a lagging indicator. This gets printed, this chart gets created after some put buying and stuff are happening. Disculpa. Sorry about that. Um, all right, so let's go check on the. I like to check the crude oil chart all the time. Energy is a asset that is right now very important because it's driving inflation and so on. Right now, the crude oil is, well, market just opened, right? So let's see the open of crude oil. We can go back to go down to the 5 minutes. This is very shallow opening. There's nothing there, very sideways. I thought market could move with the GDP revision, but nothing happened. So here's the daily. On the daily chart, we are obviously coming up from the lows at 86, and it makes sense because here is a breakout and retest pattern. We broke out here around February or January, then it came down here, consolidated, and it's breaking back up. I do expect some sort of resistance at 101 and 85 is the demand. Now if we come back to retest here, I need to reassess and see, all right, this is a sort of demand that I would be looking at. Where is it? There we go. Around here, 82. But I do see some supply here, so most likely scenario is that we go back here. Now if we come here and we retrace back down, this is another bullish pattern that I'm looking at, right? This pivot and retest here, and from here to this one, right? So bullish scenario for crude oil. That's what I'm seeing here. I do like check on commodities, like lumber is a very important asset when we talk about inflation, and lumber has been going down. That's why a lot of analysts are just saying inflation already peaked. It makes sense, but we need to see the data yet. The market does not like inflation. And here the yield curve is pricing a very tough inflation. These are level from 2002. We did have inversion in 07, 2002, the 70s, the 90s, so on. Gold and silver are neutral today, which makes me skeptical on the dollar move, because if the dollar has gone down, this thing should have been going up, but they didn't. So I think the dollar is stronger than we think here, right? After that, I do like to check on. All right, let's go to the ES chart, right? And if you see the daily came to this supply, this triple top created in April, right? And this coincides with the 200 moving average. 200 moving average started to reject prices there. Now, I'm a firm believer of the ES being the broader market and the most important market where the biggest companies are in the index, and the other three just follow the ES, right? I do not trade the ES, but I want to see where the ES is at, because the whatever the ES is doing, the others will follow, right? Um, most of the time, right? Sometimes we have some divergence, Russell going up and NQ going down, and we'll see um, which is the scenario for the same day, right? So this is a very bullish pattern. We had a breakout here. Now is a retest. We're trying to hold this breakout. Now the first one that we had was here. So this is a very, very important point, right? The turnaround point. And all these from 39.50 to the lows 36.40 is an area of demand, right? Is this gonna hold? I do expect this to hold, or at least create some sideways movement, and then up or down depending on the economic news, or how the Fed the speech of the Fed will affect these prices, right? These prices, yes. A lot of people say is a bear market rally, and then we were gonna continue going down. That will depend on the macroeconomic data. But for me, a day trader, I do like to see what happens during the day. Now we're in no man's land. Here we could have a run up or a run down. All will depend on what the scenarios for the day is, right? Today we had a pretty impactful economic news. That's the first GDP revision. It was revised towards a better number, but it's still negative, right? I do, regardless. I do not use the economic news to assess my trading direction, because we sometimes have good news and the market drops, and the opposite is true as well. So there are probabilities that I do put into my options to see what is that I'm going to do. All right, so that's the ES chart. The NQ came to this triple top. It came even higher, right? The for the ES was just tapping the triple top. The NQ was a little bit more strong, right? It was stronger when it was breaking. Now this is a very, very interesting area. I did have these retest and continuation, and now we're holding here. So this is a very, very important supply. Until we don't break this supply, I don't have a bullish bias. For now, I would like to think this thing is gonna work, because it's holding, and next stop is around 12,600 or 700, around there, right? So that's the Nasdaq. And anyway, I'm gonna go live in 20 minutes when the market opens, and I do like to see the internals, right? Today I want to pay attention to Tesla. They already split the stock. It was 900, now it's 303. So that's an important event today. Fundamentally, doesn't change nothing about the company, but certainly technically a lot of traders are gonna try to speculate with it, right? I would like to see what Apple is doing, because Apple represents 5% of the market, and in the S&P is almost 10 to 12% sometimes. depending on the market cap, right? It's a weighted index. And Nvidia has a very important news event today. It was earnings is dropping a little bit. Let's check. Let's check. So Apple came to the supply a few days ago. Now is coming back down. Is holding right here. This demand on the triple top break, which is a pretty bullish pattern. And then we have Nvidia. If we go to the 30 minute, I do have this demand created a few days ago in July, and then is holding right here, right? If Nvidia, because this is a very likely scenario for Nvidia to come here and then rejects to the downside, I think the NQ will drop a little bit. Now NQ is not the weakest market, and this is a very important analysis that I do. When rates are going up, when rates are going up, and let's go to the rates here. No, here. When rates are going up, tech companies tend to suffer a little bit. Why? Because a lot of tech companies are financed, are startups, are small companies just creating new things, and they need finance. If this thing goes up, their finance get more expensive. So investors tend to sell off when rates are going up. Sorry. That's a very interesting analysis that I got to conclude a few years ago. So if the market in general is going down and rates are going up, then the best short is the NQ. Whereas if the market is going down but rates are going down as well, so most likely NQ is not the best short, right? So with that, I'm going to conclude this video. I'll see you in 15 minutes for the live training sessions.